What is going on, guys? Good to meet you. It's your favorite mortgage lender, Dale Kwame. Got mortgages. Man, it is December 1st. We have got quite a bit to talk about. We are going to go over pending home sales. The government is back in action. We're going to go over just some of the different transitions as we're starting to see some retail sales numbers, right? People just finished Black Friday shopping. How is this going to impact the market, right? So let's take a quick recap, right? September brought a slight slowdown in annual home prices. October's pending home sales hit a yearly high, which is a good thing. We know again that the government released some of the delayed data on retail sales and inflation. Let's take a look at it. Home sale prices up 0.2% in September. We're up 1.3% on a national perspective. In many areas, we're obviously up in certain areas even higher, especially on the East Coast. September up 1.3% on a year-to-year basis. This is coming specifically from Case-Shiller, probably one of the largest gauges where we take a look at the market. We'll obviously take a look at the FHFA. That shows a little bit of an uptick of 1.7%. That includes obviously finance mortgages, does not include cash and jumbo, which we all know is a different market. We also know on the pending home sale side, the part that's interesting, right? Up 76.3%. Remember, the higher the notion, closer on the existing home sales that we see. So it rose 1.9%. Contract signings down only literally less than 0.5%. Pending home sales, again, leads closing by 1 to 2 months. We do tend to sometimes see around this time a little bit of slight transition seasonally. Continuing jobless claims. We always talk about job openings and labor turnovers. Initial jobless claims down by 6,000 to 116,000 the latest week. Again, lowest level it's been in 2 months. Continuing jobless claims, right? People continuing to receive reports almost at 2 million, guys. 1.96 million, highest reading in 4 years. We obviously know on the initial jobless claims, as they remain relatively low, sustained, people are obviously having a hard time finding jobs. Now, here's the sleeper. Retail sales numbers, right? Obviously, with the government shut down, after those delays, we saw only an increase of 0.2%, well below expectations of expecting a little over 0.6. We do know that auto, gas, some of the building material dropped actually 0.1%. Also, another important part within the PPI report, Producer Price Index, showed wholesale prices only up 0.3% from August, 2.7% year over year, both again in line with those expectations. Wholesale prices feeds directly right into the PCE report. A lot of shared components with airline fares, nursing home care. Overall, again, the report does not spark meaningful increase for September PCE. We will obviously see later on in a couple of days how that will generally impact the September PCE lag report. What are we going to get next week? Job opening and labor turnover data on Tuesday. Remember, some of this stuff is going to be lagged. BLS report with the Bureau of Labor Statistics job report after the shutdown, and then the private payroll, which surprisingly has been showing a little bit of job losses. So a lot of different things for us to take a look at. Of course, I will keep you guys updated. Any questions that you guys have, make sure you guys visit our website, gotmortgages.com. Talk to you guys soon.